thank you, Sol, for an incredible session. And we're going to continue with the AI theme now with a panel of experts. They're going to share all their insights of how AI is being used right now in financial services. Please welcome Rachael, Hadaway, and our AI panel.
Well, thank you. And I have two pieces of really good news. Sol just told us that for every time we hear the phrase AI, we get more drinks later tonight. And because this is the AI panel, we are going to keep that going. I don't make the rules, Sol makes the rules, but we're all going to take advantage of it. And the second piece of good news is I have an incredible panel with me today. We're absolutely stacked. We're going to surround this topic from all sides. I'm going to introduce our panel now. So we have Chen, Managing Director, Head of Credit Strategy and Analytics at Barclays. Thank you for being here.
Thank you, Rachael.
We have Billyard. She actually has two very important titles. The first is Chief Lending Officer of TD Bank. And the second is Champions of the Escape from Gringotts ride.
Oh, that's right.
Yeah. What was it, 6 times, 7 times?
Yeah.
Next is Jim Johnson, Co-President of Banking Solutions at FIS. And we have Rowan Curran, Principal Analyst at Forrester, an expert in all things AI. And finally, we have Dr. Scott Zoldi, Chief Analytics Officer here at FICO. So a great panel. And today we're going to talk about the power of focused models. The industry has been focused on the bigger, the better, the raw capability of models. We're going to talk about the moment today that we have in financial services to go in the opposite direction and hear from all sides on this topic of the value that can be created. The first question is going to go to Dr. Scott Zoldi. And before we dive into the panel, I want to make sure that everyone on the room is in the same page. Can you define what it means when we say focused models and what makes it focused and how is it different from the large general purpose models?
Absolutely, Rachael. So a focused foundation model is essentially a model that ensures that we have the correct, appropriate data for the problems that we're asking it to solve. So that's one of the biggest differentiations. The models that we're more used to, maybe from a commercial perspective or a consumer perspective, are trained on an entire world view of data. It may know as much about the Spice Girls as it does about underwriting. And so we have to focus it appropriately on the problems that we're trying to solve. And it's a key part of how we approach using generative AI in a responsible fashion.
Yep. So what is the case for going smaller when everyone else is going in the opposite direction?
So, in terms of going smaller, right, the main sort of focus is that these models tend to be overtrained. There's so many parameters in these models. So if you want to compare it to a general model, right, you have a huge number of parameters because you're asking it to have a huge amount of knowledge. What we want to focus on is having the right number of parameters, right, to capture what we need to know from financial services. So we don't need billions and billions and trillions of parameters to do that. But moreover, right, we also have to run a business. And running a business means that these have to be cost effective. We don't want to have huge token costs. We want to make sure that we can build them efficiently, maybe 1,000 times more efficiently than one of the larger language models, right? And we need an ability to retrain it on a regular basis. And so these are all really great advantages of being small, because we can have better performing models and ones that we have control of in the business.
Great. And I know tomorrow in your keynote, you're going to go into a lot more detail about the models you've been working on for the last 2 years. But would you mind at a high level helping us understand the distinction between a focused language model and a focused sequence model?
Yeah, absolutely. So the focused language model is like a language model that you'd know, right? We would send in tokens related to language, collectors notes, conversations, and financial data. It's typically a problem where we have some time to make a decision, and there's a huge amount of diverse data. Sequence models, right, are around payment sequences or any sort of transaction sequence where we need a decision in tens of milliseconds or less. And so it's a very different architecture that's focused on trying to extract as much information as quickly as possible so that we can meet the latencies associated with most transaction analytic use cases.
Great. Okay, now that Scott has helped with some definitions and we're more on the same page, I'd like to ask Rowan to help paint a market perspective. I know that you're working on the foundational model wave for Forrester. How do focused language models and small language models fit into that? And what is the current state of focused versus small models?
Yeah, so the state of focused models, are, as they're sometimes called more broadly in the market, analogously small language models, has been, for the past couple of years, has been kind of like Fetch in Mean Girls. If anybody remembers that movie, people have been trying to make Fetch happen for a couple of years. What is happening this year is really that we're starting to see folks really start to use more of these smaller and focused language models, and for a lot of the reasons that Scott said. And I think what we've seen in the market is that there's been a necessary kind of maturity arc that companies have to go through to realize the value of these more focused models. So something that we'll see typically with our clients is they'll implement some type of agentic or generatively driven process using one of the very large foundation models to attack the problem. And then they'll get it into production, they'll see it's working well, and then say, well, actually, we need this to come back in a shorter period of time, or it needs to be a lower cost, or whatever it is. And then they start to investigate, oh, well, we could actually use a set of smaller models that are more specifically designed for this task, and we get a much higher efficiency out of it. And so that's kind of been the arc over the past couple of years. So now we are having folks like FICO and others developing more of these directed models for specific workflows and tasks. And additionally, we're starting to see a broader variety of these more focused foundation models. So Scott was talking about the sequence model. One thing that I've also seen appear in the market quite a bit recently is time series foundation models. So being able to understand sequences of things over time within a system. And these different types of more specifically focused foundation models are enabling different types of business processes to be targeted much more specifically. So I think you'll see over the next couple of years more of these more focused foundation models be introduced, but when you're thinking about using them, it takes a bit more nuance and a bit more clarity on what your goal and your use case is, because you can't just throw whatever task it is at that model, since it's not a generalized foundation model. But we definitely see them starting to encroach on the market more than they have been, for sure.
Right. Rowan, is there anything about financial services that makes these types of models more likely to happen, more likely to have our Fetch moment?
Oh yeah, so I actually think that financial services and other areas where there's very strict regulatory needs and where there's sequences of events that are very, very similar or almost the same over and over again is where more focused models can be much more applicable, because they're not having to deal with such a wide variety of potential inputs or situations, so you can really target the inputs and outputs and behavior around what your needs are. So I think when we're looking at the financial services space, there's a lot of advantages to it. And the other advantage that we haven't really talked about on top of this is the sovereignty aspect of all this. So if you have a smaller language model, a more focused model, it's much more likely that you're going to be able to deploy it either within your own private cloud or within your own data center, and therefore have control over the data that's going in and out, more control over the behavior and things of that nature. So there's a couple of different reasons why I think financial services are potentially going to benefit very significantly from this.
Liz, we were recently lucky enough to complete a successful FLM POC with you. First of all, what appealed to you about starting this project, and what were some of the findings that stood out to you?
Yeah, absolutely. So maybe one of the first things to talk about is the ability to be able to come to forums such as this to learn more about the opportunities that we have to better action our business. It was last year, listening to Scott and his team talk about FLM, that it really became real, that the governance and the structure that was needed for these types of tools was ready. And that was exciting. When we were looking at how this is constructed, and it really goes back into the name, which is focused. Bigger is better, that's the past. We need something that is focused and specific because of what we are doing when we are adjudicating credit and understanding credit. That is very heavy. It's extremely important to helping our customers make real financial progress, is we want to ensure that we get that right. And so focused is better. The other component that really impressed a few of us who were here last year was also when we were thinking about the underpinning of it itself. And what we're looking for is something that's highly explainable. And being able to understand that through the language foundation, it was trained on financial services information, also contained in what information that it could then leverage from our team internally. All of that in combination, hugely powerful to be able to explain in something that we could trust. Because the governance and the transparency, that's the table stakes. Yep. If that's not there, we couldn't pilot anything. And so the next piece is, yes, very soon after coming from the conference, we talked to the team at FICO, talked to Scott directly to understand how we could make this become real through a pilot within our own organization. And of course, Scott, we gave you, I think, one of the most hairiest examples we could find. And we learned a lot from it. I think that's the important part. We learned that a lot of the data and information, which is unstructured, which could be really powerful for the outcomes, that we internally had to ensure that we had a process to be able to bring that information together, where you might have scanned documentation. Is it readable? So one was for us internally is understanding, do we have the foundation to be able to leapfrog forward? Because we're going to have to be able to do that. So that was one of the first learnings that we had internally. The second piece, and this is where the power really came, and it was incredible, was that we were ingesting and training, and Scott's team training our own policies and process information. That was actually very quick, much faster than what we had anticipated. And through that, then running and understanding where we had a lot of unstructured data, right? People are writing information. Like I said, we found the most hairiest examples we could. It was able to synthesize it. And there was no human aspect as far as understanding our policies or not, because the way the model works is it looked at, here's your outcome, here's exactly what you said your policies and your processes should be, and here are your differences. And poof, we learned a lot. One, we learned that some of our policies are being understood in maybe a way that we want to ensure there's a bit more understanding. So that's one piece. The other piece is where it was outside of what we expected. It gave us the ability to be able to take a deeper look and understand it. But what was really powerful is that generally when this is happening and you're in an executive position, it's really hard to get synthesized information. This tool was able to synthesize the information. So think about the challenge that people have, being able to consume all of these different aspects. This tool was able to summarize it. What was in expectations, what may be, and I think this goes back to our previous speaker on amplifying the human, helping the human to say, and here's where it may be outside, and then how does it all come together to make that decision? I would say for a pilot, highly successful. Are we end of job? No. There's exciting next steps that we're also talking about.
Right. So you were able not only to learn more about model performance, you also will learn more about your own foundations, your own policies, and also were able to bookend that with auditability.
Yes.
So those three things coming together more than just model performance.
Yeah, absolutely. And I do think that that's the imperative piece, is that if it's not, if it doesn't have the right governance, if it doesn't have the right transparency, particularly in financial services, it's not going to be useful. So that was table stakes. And I think that Scott and his team, the way they came together, worked with us on this, really highly advantageous.
Perfect. Okay, Wei, sitting right next to me. Why does an FSM appeal to you to use in fraud?
Okay, great question, Rachel. Three things come to mind, right? First, I think speed matters, particularly when you think about detecting fraud at the point of sale transactions. Decisions need to be made in milliseconds. Don't believe any of us want to kind of hang out waiting for, okay, can I buy this or not, right? So I think it needs to be made really, really fast. And focus sequence model is actually well suited for that. Second, cost efficiency. I think that's a fairly obvious one. When you run through billions and billions of transactions, efficiency matters, right? I think the third, actually, really, I think let's touch on a little bit is, I think, first of all, signal to noise ratio. The sequence model actually has a very kind of good edge on that one, but more importantly, you can explain things. In a heavily regulated industry that we operate in, that's a must-have.
One of the things that I think is more unique about the FSM is this context window. What is the importance of understanding context when it comes to addressing fraud?
That's a great question. I think Scott and I actually were, matter of fact, was discussing that backstage. I mean, I think to say context is everything may be a little exaggerating, but won't be by much. Simple example would be if we are kind of seeing our customers making transactions typically near home, and then you see a large dollar transaction happen thousands of miles away, that will cause all of us to pause for a second. But if we also know that this is the same customer, vacation at the same spot every year, same set of restaurant more or less, then now you feel differently about whether that transaction is legit or not, right? So I think this is where, I think with the computing power that we have today, we don't have to be limited to, summary statistics that we all rely on in the, kind of in the past, where it's really kind of geared for, okay, you need to do speed, but can't really, so then include too much details, right? But detail matters, but detail actually give you context.
So in your business, you want to protect customers while also giving them as much flexibility to live their lives as possible. This becomes another tool in your toolbox.
Absolutely.
Okay, great. Okay, Jim. So
Morning.
New news. Recently, you bought TSYS, largest credit card player in the world. Tell us a little bit about that. How does that play into your data and your AI strategy?
Yeah, obviously in our space, we serve financial institutions across the money life cycle. Money at rest with deposit systems, treasury systems, money in motion with all of our payment suite of products, and then money at work with our wealth, investment, lending products. One area where we had a pretty big gap was on the credit card piece of the business, critical piece of the business. And yes, TSYS solves that. But more importantly, it really fills and delivers to us a huge asset in data. For instance, just to give you some context, we now see 70% of the credit card transactions in North America. And when you combine that with the data, not only transactional, but also event-driven data across the other parts of the life cycle, it really allows you, if done well, to tell a lot about an individual.
Yep.
The challenge we've had is step one before any of this AI is really mining the fuel to feed it. And so that journey, we've been on that journey for 3 to 4 years internally at FIS, taking monolithic platforms, getting them into the cloud, getting data in infrastructures and storage arrays that are real time and can make that available. TSYS is on that same journey. And as we've brought the companies together here the last couple months, we've been able to put the data from all parts of that money life cycle into our data and AI platform and start to apply the first of what we call 15 different use cases that we think can drive value.
Are any of those use cases specifically focused on better meeting complex relationships that you have with your customers? Is AI a tool for you there?
Yeah, absolutely. And what I would tell you is, my personal journey with AI, just like many of people, it's intimidating as it relates to kind of the learning curve on that. My biggest tool in that is 1-800 Scott Zoldi. Yeah. And so much like you last year, the FLM piece of that really motivated, me becoming my own chief learning officer in that regard, and have taken off on that. And FLMs are extremely important in our shop vis-a-vis, an LLM from the standpoint of one, we're in a very competitive industry, right? Serving and providing financial services to our customers and your customers. We win in the margins, right? And if you can make a very small difference at scale, you can make a massive impact. And the precision that comes with an FLM is critical. Secondly, Liz had mentioned it, trust, compliance, audit, the decisions we make, we have to be able to withstand the government scrutiny, compliance rigor that surrounds us. And lastly, just the ability to be quick, cost efficient, and have flexibility around the individual characteristics and risk profiles of our customers only can be delivered through an FLM vis-a-vis a wider, broader.
Great. We're gonna wrap up with one last question, and I want you to answer in just one sentence or less. One of the things we took away last year is when we started talking about these focus models, one of the big disruptors was going to be, bigger wasn't better. For each one of you, when we think about the age of AI, what is a disruptor that you weren't expecting, but you're now seeing being a huge trend? I'm actually going to start with Rowan. I'm going to ask you to give us your sentence.
Agentic engineering is going to change everything behind the scenes way faster than anyone thinks.
Okay.
Oh,
Liz.
look, I'll tag on to that, which is it is going to be our imperative to keep up with this new standard.
Okay. Scott Zoldi.
I would say AI decomposition, using agentic AI to really break down those really, really hard problems that we're trying to rely on the more complicated technology to solve.
Jim, do you have one?
Yeah, I think digital currency and how that's going to impact agentic commerce and the complications and opportunities that will exist because of that.
Great. Wait.
I have a quick one. I think for me, the biggest one is it allows you to now reimagine how everything gets done.
Right.
That's the most important thing for me.
Great. Well, that's great. And this will keep our agenda for the future FICO Worlds full of ideas. So I would really like to thank everyone on the panel for helping us understand focus models and where they're going and why the time is now, why it's going to be the fetch for financial services. Thanks, everybody. And now I'd like to bring out Jason, Andrew, and Julie May to present the FICO Decision Awards.
Thank you.